Alright, today is Wednesday, November 4th, and this is a post-market review for the stock market activities today. Let's get the elephant out of the room. We had the elections yesterday, and the outcome was basically the worst case scenario. For now, it appears the former Vice President Joe Biden will be the next president of the United States. However, it also appears that the Republicans will continue to keep their majority in the Senate. And the margin of victory for Joe Biden is razor thin, which will open the floodgates for lawsuits and contested elections. And that was the market's worst fear coming into this elections. So why the hell is the market having a massive rally today? I've heard so many geniuses trying to explain it on TV, saying that, the outcome of the contested elections and a divided government is the best case outcome. If that was the case, then why didn't you tell us before that? And all of them trying to bullshit their way to rationalize the move in the market today. And I will show you examples of how hilarious their attempts are. They're all speaking as, this was expected, that stocks are going to rally after the elections anyways. That is not what they've been saying. But now they have to cover their asses somehow and pretend that they are experts and they expected this outcome. They did not. Their guess is as good as yours and mine. They have no clue where the market exploded higher today after the worst case scenario, and neither do we. But we are not going to pretend to know what happened here and rationalize it and say, I told you so. This was expected. We knew about that. We didn't know shit. Traditionally, when the market heads into a big event such as elections with a certain setup, and that setup you saw in the last few days and even the last few weeks, a bet on a blue wave sweep. Inflationary trade, lower dollar, higher stimulus. This was the trade. The Biden trade. And you saw banks doing all right. You saw technology lagging for a while. You saw industrials catching a bid. And again, traditionally, if you go through the event and the outcome is different from expectations, usually the market would crash. And even if the results sometimes meet expectations and the predetermined outcome, we see sell the news phenomenon. This is not what we saw in the market today. I think what happened today is pure market manipulation and confusion. And it was done in the pre-market, and I will show you exactly when I cover the charts how did that take place. I was tweeting last night live throughout the elections, and I tweeted one of my tweets saying that the Nasdaq futures are soaring as Trump starting to gain the lead and become the favorite to win the state of Florida. There was a massive buy-in program that was launched and executed by market makers, the big firms, overnight. They created a floor above it, and overnight traders added to it. And when we opened for trading today, you saw some retail traders also adding to the rally, but not significantly. Even as the results started to appear that we will have a contested elections and Joe Biden is more likely to win the presidency. The purchasing program that was executed after Trump became the favorite to win Florida was not removed. It was still being there, and we just continued to build on it. But questions will be asked in the days to come, and in my opinion, the knee-jerk reaction that we've seen today is not sustainable. With that being said, let's move on and cover what happened in the market today. And here we go. The Dow Industrial Average closing in the green by 367.63 points, or a gain of 1.34%. The Nasdaq, the clear outperformer today, up 633.18 points, or a gain of 5.78%. S&P 500 up by 74.28 points, or a gain of 2.20%. And here are the sector's performance. Leading the day and capturing the gold medal, healthcare, followed by communication services, aka Facebook. And for the bronze, technology. The laggards of the day, the Biden's trade, basic materials, utilities, industrials, financials, all lagging the day. Healthcare, you could justify and say a divided government is good for healthcare because we are less likely to see an increase in drug prices or any significant healthcare reform. But when it comes to communication services and technology, this was supposed to be the Trump trade, and now he is losing. He's not winning. Again, that is a further proof to the setup for the market today. The buy purchasing program that happened overnight was never removed, and we just built on that program and we added the trade that was favored from a divided government, which is the healthcare trade. But all in all, this is a knee-jerk reaction. These moves make absolutely no sense, and my best guess is that they will be corrected in the days to come. Moving on to the futures market, we saw crude riding high today again. Muted action in softs with exception to lumbar, having a 2+% gain today. What's going on with metals? And again, you see the confusion and the erratic, irrational movement in the market today. Gold not doing anything. The majority of metals, including copper, staying muted, but somehow silver is down over 1.5%. Meats, we see feeder cattle continues to ride higher. It's been on a tear, and the tear continues. Lean hogs, same story, again of more than 1% today. Grains, soybean products and corn outperforming today. Wheat, rough rice, oats, canola, all muted and slightly in the red. Moving on to the options market, the big casino. And this is an important point to bring. If this was a legitimate move for the market, we would have seen a follow-up from retail traders. But even retail traders today were very skeptical about the move, meaning that we did not even see the Robin Hoodists stampeding to buy call options as you would have expected from a huge market rally today. And here is what happened. NEO at number 1 with 1.4 million contracts. 70% of those were calls. Apple coming up number 2 with 1.4 million options traded today. About 63% of those were calls. Again, notice the numbers. We're not talking about 70, 75, 80% calls. We're talking about 63%, which tells me that retail traders as a majority did not buy the market's move today. Some did, and I saw the activities buying the 300 plus Facebook calls. We're not going to pay attention to that. We're paying attention to the rationale of the market, whether this is just another massive trap or if the momentum to the upside will continue. But here we go. Number 3, Facebook. Massive gain today of over 8%. And we see about 462,000 contracts trading for Facebook today. About 67% of those were calls. I did not see any interesting trades today. They're all just built up, rounding to another number, the higher number for calls in Facebook and NEO, etc. So we are not going to cover any more activities in the options market today, but we will move on to the news that shaped the day. And right away, here is an update of the elections from the New York Times. And by the way, just before I started recording this video, we had breaking news that the state of Michigan is now called officially for Joe Biden. So now he carries Wisconsin and Michigan. And if he does keep Nevada and Arizona as expected, that would be good enough for him to capture the presidency. And here is how I see the map when all the votes are counted. Pennsylvania will still go for President Trump, or shall we say former President Trump, while Michigan, Wisconsin, Arizona, Nevada, and perhaps even Georgia would go to Joe Biden. And right away, we see the Trump campaign filing lawsuits all over the place in Michigan, Wisconsin, contesting the vote. And we will see a ton of lawsuits, and this is basically the year 2000 on steroids. Back in 2000, only one state, Florida, was contested, and we saw a recount. This time around, we will probably see contested elections and requests, at least, for recounts in 3 or 4 states. This is a big mess, and it's not going to end very well. The president is not going to just voluntarily leave the office when the elections were determined by a razor-thin margin. It's just going to get uglier by the day, And I don't think the market is counting for any of that. And the misinformation campaign from the business news, media, and the analyst community continues. Today, they're saying to you, oh, it doesn't matter. All the volatility and the contested elections and the ugliness that we're about to go through does not matter because the Fed, invoke the Fed. So if that is the investment strategy, then why the hell do we have to keep paying attention to any event if the Fed will always come to the rescue? Number one. Number two, why the hell do these analysts and wealth managers still have a job if their entire investment thesis is, oh, but the Fed? Shouldn't we just hire a bunch of Robin Hood traders to manage our accounts for a much smaller fee? Because again, the investment thesis is very easy. The Fed. So you just buy. You buy an autopilot and who cares? The Fed will always come to the rescue. Even though the Fed itself in the last few weeks been telling you it is on the lap of fiscal policy to act now, aka we ran out of ammo, and they're not gonna conduct major interference in the market unless we see massive decline, or we're talking 30% plus. So are you just gonna wait till that happen and go through it until the Fed rescues your ass? And now that we have a divided government, we are less likely to get a massive stimulus, aka fiscal intervention. That doesn't mean right away that the Fed will somehow overcompensate for a smaller stimulus. The Fed has a lending power, not a spending power. And the majority of the story behind the rally since March was the quote-unquote recovery in consumerism. And we do know that that only took place due to the stimulus, the first round of stimulus that caused a domino effect. It increased sales in Amazon and more retail spending, etc. And now you're telling me that the smaller stimulus somehow is the best case scenario and we should rally based upon that? Again, erratic, irrational move from the market today, and it is nothing more the market manipulation that happened overnight that me and you could not do anything about, and we just have to accept it. It is a pump and dump. The question is, when will they dump? And by the way, let's move on to cover some of the good news about the economy that we got today that justify the need for less stimulus. Number one, the ADP employment numbers came out in the morning today with a massive mess that we haven't seen before. The number was for October 365,000, while the estimate was 650,000. So we almost missed by a half. And by the way, the previous month was 753,000. Massive decline. The market did not pay attention whatsoever to this piece of news and continued to rally higher. Because again, it was a buying program, a massive buying program on autopilot, and selling was pretty much prohibited. And that kept the floor on the overnight pump. Moving on to even better news for the economy. The ISM services number for October came out as 56.6 versus expectations of 57.5. A massive miss, and the biggest miss since the crisis started. And right away you see from the chart that the ISM services PMI is curling downward. That V-shaped recovery is pretty much going to be a double bottom formation, yet somehow that is good news for the stock market. I think that was worthy of adding about, let's say, 200 to 300 points to the Dow. Maybe, let's say 300 points to the Dow. And more good news. The US reported the second highest daily number of COVID cases on elections day. What do you say? Another 200, 300 points to the Dow? Sounds logical. Oh, but the Fed. And now let's have some fun by watching some of the morons, quote-unquote analysts, who tried to justify and find a reason for the rally today in technology specifically. Somehow these quote-unquote experts knew about it all along. They just forgot to tell us before the elections. Starting with this moron lady that we see on CNBC, and she is the most annoying analyst on the network. She just pumps regardless, and I wouldn't trust this lady with a penny I found on the sidewalk. But let's have fun. She tried to explain it, the anchor caught her, and then she stumbled all over the place.
We had this
Not
whole
tonight.
narrative. We had this whole narrative leading into today or yesterday, election day, that the market was ready for a blue wave. That was priced in. How could that be priced in? But now also a contested election is priced in. They can't both be right.
Well, I'm not saying a contested election. A contested election is different than letting all the votes count. I'm talking about the president coming out and making that statement. And so I don't think that that's what's going on, right? So I believe that the market kind of anticipated a blue wave, but I also think that, listen, we really can't, it's really hard to call, because I remember 4 years ago, the market thought that things were going to go a certain way, and they didn't. And I really do think that, tech is higher, because I really think that, that the market,
Well, you got to find some growth somewhere, right?
sorry, I
I
can't
think
hear
we
you
lost.
guys.
I think we lost Tiffany. Mel, you want to take it from here?
Sorry. Yeah, we're gonna ask all of.
Moving on to another moron analyst who says that the rally today was justified and we will even rally an additional 13% from here because investors care more about taxes than fiscal stimulus. Oh, it's about taxes now. So all the pumps and dumps and talks about stimulus for weeks now, that was meaningless. Who cares about stimulus? All what we really care about is taxes. And with a divided government, taxes are not gonna go up. And therefore, the rally is justified and will even add more to it. Now, what this genius forgot about is, in the best case scenario for taxes, let's say Biden wants to raise taxes and Mitch McConnell doesn't, and we end up not raising taxes, meaning that the tax rate will remain constant, no change whatsoever. The only net change that we have is that we're gonna have a smaller stimulus this time around. And if taxation was the concern, the market wouldn't have rallied on stimulus optimism and blue wave optimism, which meant more stimulus. Clearly, the market cares more about stimulus than taxes. But every genius has to have somewhat of an explanation now, and I told you so, and yeah, this was expected. Bullshit. If anything, you guys have been telling us that a blue wave was actually good for the market for weeks now. And just to illustrate the ridiculousness of this narrative, here's a perfect tweet from Zero Hedge saying a disputed election is bad for stocks. Legislative gridlock is bad for stocks. But somehow the combination of the two is great for stocks. Wow. This is what happens when you pretend to be an expert and you try to explain the unexplainable. It was market manipulation, pure and simple. Here was another one. If I told you yesterday that there would be no blue wave and results would be delayed, would you have believed that today would see the best first day S&P 500 gain ever after a presidential vote? And look, the thing here, they were planning on manipulating the market regardless. If a blue wave would have happened, the market would have rallied on blue wave optimism and a bigger stimulus. If Trump won instead, they would have rallied the market as well based on no tax hikes optimism. But I gotta say, it is surprising that they managed to rally and pump the market on the worst outcome possible of contested elections and divided government. Oh, and by the way, do you miss the stimulus talks about the talks? Well, we're gonna have them again. The only time around, Slimy Mnuchin's not gonna be there. It's gonna be Nancy versus McConnell. And McConnell's now saying, hey, we could even do state and local governments included in the stimulus, no problem. But we know that in 2 years, the Republicans will have to face re-elections again. And all the bullshit optimism about divided government being good, yes, we're gonna have smaller stimulus, but we're also not gonna have tax hikes, and the Fed is likely to intervene. Remember, we have over $3 trillion budget deficit that has to be filled somehow, and it's not gonna just happen by printing more treasury bills. They will have to hike taxes somehow. Yes, the hikes might be not as big as expected under a blue wave, but that would be a process of negotiation of a smaller stimulus in return. Mitch and Nancy will negotiate, and we will have a bad outcome anyways. smaller stimulus in addition to moderate tax hikes. That is my take, at least. And lastly, let's check on the bubble. And right away, you see that the PE ratios for the S&P 500, we're talking about the forward PEs here, the more accurate ones, at pretty much the highs of the dot-com bubble. We know what happened then, and you can guess what will happen now as well. But don't worry, keep buying. There is no bubble. In more contested elections and delays and no stimulus is apparently good for the stock market. Moving on to the heat map analysis, and let's check on what happened today. Right away, you see that the inflationary trade, the Biden trade, which we talked about a few days ago, we're talking about financials and industrials, basic materials. We identified these three sectors as the Biden trade, in addition to healthcare. But we'll talk about healthcare separately in a little bit. Now, the financial sector suffered losses due to the declines in yields. Right away, you saw the market pretty much canceling the Biden trade, such as industrials. You saw Caterpillar down big today, and you saw gold and copper all down, trading severely in the red. Now, mind you, Joe Biden is projected to win the presidency. But here is the confusion and manipulation combined together in the market characteristics today. Bear with me. We saw the solar trade. A lot of younger traders bought solar stocks in anticipation of a big Biden win. Well, Biden won indeed, yet solar stocks got whacked today. Massive declines across the board for the solar names. And by the way, including Tesla. Not a massive decline for Tesla, but it certainly lagged the other tech name you usually trade with, because this was another Biden bet. Again, it sounds like we're talking that Biden lost the elections, meanwhile he actually won the elections. But let's say this was the sell the news phenomena, which it wasn't, but let's just say that. And I'll even go as far as explaining the healthcare trade for you. A divided government is good for the healthcare industry. Again, Trump wanted to cut drug prices. That's not going to happen anymore because Trump is not going to be president anymore. The Biden plan maybe was a little more aggressive against health insurers, etc. Well, now we're going to have a Republican Senate that will keep whatever policy in check to be friendly to the big healthcare donors. They get what they pay for. But now we get to the funny part. Yields are down, so you'd think utilities would rally. Not the case. What about the travel, the reopening trade? We saw airlines muted, but somehow hotels such as Marriott trading big in the green today. And then of course, the tech trade. Facebook, Google, Zoom, DocuSign, the momentum trade, Peloton, Apple, Microsoft, Nvidia, Netflix, etc. rallying massively today. Some tried to explain it just like that poor lady you watched earlier, and their explanation was, oh, you gotta find growth somewhere now that the inflationary trade for Biden is gone. Even though he won the presidency, we have to go back to growth. What does that mean? They don't even know. They're just parroting each other. The second explanation is, oh, now that the inflationary trade is off the table, let's replace it with a deflationary trade of buying high growth stocks. This is the Trump trade. But again, a reminder, Trump did not win and is not expected to win even after all the contestant and lawsuit fiasco is done. It is virtually impossible now. Yet somehow the market had its cake and ate it too. They kept the Trump trade, they kept whatever they liked from the Biden trade, and they added what they like from the contested elections / divided government trade. We will see how long will that last. But now, moving on to the rotation trade. And we'll give you a little bit of color here. Big gains for momentum stocks. Look at PayPal, up 8%. What happened here? Did they report earnings? Were they good somehow? It's just the unexplainable pump. Zoom up 7%. DocuSign over 12%. Nvidia almost 6%. And look at Facebook, 8%. What happened now? What happened to Facebook that we did not know last night? Oh, the scrutiny is over now. No, it's not. Biden will be president. Congress is still there. The Republicans also have concerns against Facebook, especially after what happened last night when they labeled Trump's tweets as misleading. And look at poor Tesla. Down today, did not manage to follow the rest. Very interesting action. It does not make sense whatsoever. Moving on across the aisle, and you see again, look at the confusion, the knee-jerk reaction, the unexplainable, explainable, not explainable things. Airlines like Southwest were muted, even to the red for some names. Check out MGM, down over 1.4%. Yet somehow Marriott managed to be up 2% or so. And check out Emerson, one of the big industrial names that have been rallying on optimism that Biden will win. Well, now all of a sudden they're giving the gains back, selling the news. A combination of sell the news, pump the news, bad news is good news, a ton of stuff happening in the market today. Big confusion day, but relax because it will be sorted out very soon. Moving on to cover some charts, starting with the 15 minutes chart of the SPY. You see today's activities gapping very high early in the morning, and by the way, all of these lines, the blue lines that you see, the support and resistance lines, these were pre-identified last week. And right away we caught support from one of them, specifically 339.50 in the morning, and we continued to rally, facing a little bit of resistance around the 345.70 resistance level, then cracking above it, peaking for a little bit before at the end of the day the SPY started to slide lower. All in all, the action for the week so far been a series of bull flags. You see the first bull flag on Monday that led to another pump and a gap higher, another bull flag on Tuesday, and now we're seeing a bigger bull flag on Wednesday. And the rationale here is we're going to see another gap up and another bull flag formation tomorrow, until and unless we see a reversal signal. But again, keep in mind that today's activities were a knee-jerk reaction, and the cycle of news will start to develop rapidly tonight, and we could see a very different action for the indices overnight. Keep that in mind. Moving on to the daily chart of the SPY. And what do you see? You see a series of gap higher. The last time we saw that action was in October. We gapped 3 days in a row higher, and you know what happened next. The market reversed and trended lower significantly. All of this gapping creates air pockets, and once you hit the air pocket, you see a flush to the downside. Moving on to the Qs 15 minutes chart. Right away, again, the lines are predetermined, gapping higher in the morning significantly, and we caught support from the 282.30 level, again pre-identified from last week. Then facing the resistance at 285.70, cracking above it, testing it, retesting it as support. We managed to close the day above that support line. And just like we discussed with the SPY, here is a 30 minutes chart just to illustrate for you the series of bull flags in the Qs as well. The Qs playing catch up to the action that we saw in the SPY the last 2 days. The Qs lagging a little bit, today playing catch up, forming another bull flag that is technically supposed to play to the upside. But again, we are bounded by the news cycle. We need to see when will this pump and dump program that happened last night, we've seen the pump, when are we going to see the dump part of the program? And by the way, let's move to the Nasdaq futures chart, 15 minutes chart, just to illustrate to you when did the program take place. You see the first arrow pointing at the trading or the end of the trading day's activities for yesterday. As the election started, the futures were flat, moving slightly higher. And when it became apparent that Trump will win Florida and perhaps the blue wave scenarios out of the window, and I was tweeting live about these information, you saw a massive purchasing program for the Nasdaq taking place, pushing the futures higher and higher. And as the results started to pour in and we saw Biden leading in Arizona, we saw a retreat in the futures, specifically when Trump started speaking and prematurely declaring himself the winner of the elections, also announcing his intent to contest the elections. Yet the program managed to rescue the Nasdaq futures again, specifically after we started seeing that the results and the gap in Pennsylvania for President Trump is very, very large, and it is virtually impossible for Joe Biden to catch up to his lead. Of course, when it became abundantly clear that there is a floor on the buy program and there is not going to be any selling happening anytime soon, regardless of the outcome, you saw retail traders and institutions overnight also buying the futures, pumping them higher. And as the trading started in the US, more retail traders joined the rally, keeping that floor solid. You have to remember, before this week even started, a lot of bearish activities took place in the market. A lot of hedging, buying the VIX, buying puts on the SPY, buying puts on the Qs, bidding for the worst case scenario, a contested elections. At least it was a hedge against that outcome. Now that the outcome becomes a reality, those people who sold you the protection are now playing market manipulation, pumping the market higher to make sure that your hedges that you purchased, rightfully so, to protect yourself from this exact scenario expire worthless, at least if you bought them short term expiring this week. And what do you know, after they accomplish the mission of making all your puts and protections expire worthless, they dump and they crash the market again because, oh, now they realize that we have a contested elections. Just keep that in mind. And by the way, let's take a look at the Qs from a daily perspective. We have seen this gap higher candle before and it did not end well. We saw a reversal right away and a flush down in the days to come for the Qs. Will we see the same thing tomorrow, perhaps as we wake up from the euphoria that we indulged ourselves in today in the market? Perhaps, but you have to keep in mind that the manipulation was meant to destroy your hedges. So they're not going to try and make it for one day and then give up the next day before the end of the week. They'll try to push the rally all the way to the end of the week. Whether they become successful or not, that is a different story. But the retail trader has to speak and fight back and start selling stocks, saying, hey, the outcome is not clear. This is a big mess that we will deal with for months to come perhaps, and we are not going to have a stimulus anywhere soon. And if we have it, it's going to be a lot smaller than we thought. If that happens tomorrow, you will see a reversal to the downside. I'm just trying to explain to you the dynamics of how the market will function. Moving on to the Dixie. Did the Dixie do anything remarkable during the day? Not really. You see, during the elections and the height of the volatility, the Dixie pumped higher over the 94 level. But again, as we started seeing the rally in the futures, the Dixie retreated back to where it started, below the 93.5 level. It remains resistance until we break above it again. But all in all, no notable activities for the dollar index here. The dollar index remains muted and waiting for a clear outcome before making its final decision, unlike the stock market. And gold, by the way, did the same thing, very muted today. What was not muted is the TNX, the 10 years Treasury yield. We've been talking about the mystery, about the pump that we've been seeing in the last few days, and now you see the explanation right in front of you. The TNX collapsing today significantly, giving up all the gains for the week. Again, remember, three themes, different themes today. Number one, dumping the Biden inflationary blue wave trade. You saw banks down, yields significantly down, industrials down, Tesla down, solar down, and then you have the divided government theme in the healthcare trade today. And the last theme is the Trump theme in the technology sector and the momentum names, even though Trump is likely to lose the elections. Therefore, be patient. Don't make any knee-jerk reactions. The market will sort all of this information out, and all of these pumps and dumps and gaps and air pockets will be corrected. We just have to wait and be patient, not making any serious commitments one way or the other. And lastly, look at what happened to the VIX. I feel like Don Vito Corleone in The Godfather. Look at how they massacred my boy. And indeed, they massacred the VIX today. A massive flush down, but I'm not buying it, meaning I'm not buying the move. I'm actually buying the VIX again. Understand that now it is becoming clear, after calling Michigan and Wisconsin that Biden will be president. The current president, Trump, will refuse to give up. The lawsuits are starting, and perhaps we're going to have a sitting president who will refuse to leave office. Massive surge for volatility is about to come. The moronic movement today will be reversed and erased. I see further gains for the VIX. Let them do their thing and hit the VIX and celebrate prematurely, and you'll see how this party will end. And now let's move on to conclude this video. We talked in length about the market manipulation and the confusion that happened today with different themes. Some stocks riding on a Trump win, even though Trump did not win, dumping the Biden trade and somehow cheering for the divided government trade. It's all garbage. It's all bullshit. Unfortunately, it is very frustrating if you shorted the market this week, or even if you did the right thing by buying hedges against your longs. All of a sudden, the outcome that we hedged against happened and the market rallies instead. Today was the unexplainable, the irrational, regardless of how, quote-unquote, the experts and the analysts tried to justify it and tried to explain it to us. I expect that the pump that we had today will be met by a dump very soon. And all what they're going to do is they're going to trap more traders to feel safe and stampede and rush and buy Apple and Facebook and all the names that rallied today before dumping on their heads, realizing that having a big constitutional fight and contested elections, a president who doesn't want to leave the White House, smaller stimulus, all of that, the stuff that we ignored today will come into calculations later. Remember, it is the donkey mentality. Buy first, ask questions later. The time for asking questions will happen, and it's not going to end very well for those who bought the pump today. Now, the last thing before we finish this video, let's preview some earnings for tomorrow because we have a big earnings day coming up, starting with Alibaba, T-Mobile, Trading Desk, or the Trade Desk rather, Roku, Uber, Peloton, General Motors, Square, Electronic Arts, and Take-Two. We will review them all in addition to all the earnings reports that we missed on reviewing this week. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.